Good morning everyone, welcome to Morning Markets on Monday the 17th of February. What I'll do today is just talk a little bit about a couple of stories and then talk about what's happening later in the week of things that we think will be important for markets. Starting with today, I think it's worthwhile mentioning the figures that we saw from Japan in terms of their fourth quarter economic performance, where we saw very disappointing numbers both on a year-on-year basis and a quarter-on-quarter basis, with GDP falling. That's disappointing given what we've seen happening in the domestic economy from some of the stimulus that the Bank of Japan has been putting in place. A large component of that negative drawdown was what was happening with domestic consumption. That was because of an increase in VAT tax that was applied in Japan during September, but now that's obviously feeding into the numbers more than we and probably a lot in the market anticipated. So a bit more digging to be done into terms of what's happened in Japan's economic performance. Why is this interesting? I suppose ultimately then if we contrast that with some of the economic data that we saw on Friday from the US, where we saw ongoing strength in retail sales, but even more importantly, the consumer sentiment indicators from the University of Michigan were also very positive and showed improvement from the last survey. That speaks to, I suppose, the differences that are happening from a global growth perspective. Last week we touched on the negative environment in Europe. We've seen some evidence of negativity in Japan, yet contrast that with the ongoing strength that we continue to see in US economic data. And by definition then we're seeing ongoing strong performance from US markets. Turning to the week ahead in the economic calendar, we get UK unemployment data, which again will be giving us a good indication of any post-election improvement that we've been seeing in the UK economy. As we then move into the latter half of the week, we have details on inflation across the globe, which again speaks to some of our commentary from last week around the relatively low rates of inflation globally. And then the other and key indicator I think for this week will be around the purchasing managers indices that we will see both in Europe, the UK and in the US towards the end of the week. Why are these important? These will be the first sentiment indicators that we get post-coronavirus. That'll give us an insight into how businesses are thinking about the impact of the coronavirus for the coming number of months. The US market, it's closed today for the President's Day, so we'll not get much of an indication overnight from the US for the obvious reasons. Hopefully that was useful, and we'll see you again tomorrow.